community. And with that, I'd like to hand it over to Diane, um, who's going to say a few words on behalf of Coastal.
You have a soft mute? Hi, good afternoon, and welcome to today's presentation. First of all, thank you, Karen, for allowing Coastal States Bank to present today at this workshop and to be a part of SCORE. I mean, SCORE plays a very big part in our community for not only nonprofits, but small businesses and other businesses within our area here locally, but also statewide and nationally. So we appreciate what SCORE gives back to the community. Just a little bit about myself. I'm the regional president for Coastal States Bank. Coastal States Bank is a community bank headquartered on Hilton Head Island. We're about a $2 billion asset bank. We have 5 branches here in the Lowcountry, with our newest branch over in Beaufort. We have branches in Savannah, and we also have branches in the Atlanta area. Like I said, it's a community bank, so I value what we do for the community. And one thing that we appreciate are all the nonprofits that are not only in our community, but outside of our footprint here and what they do for the community. Each and every one of you have something that your organization is doing and bringing value back to the community. And so we feel at our bank that we bring value back to the community in the same manner. So again, thank you for giving me this opportunity today to speak about the deposit side of the bank. I've been in banking for an extremely long time, so I'll be talking about the deposit side. We're going to introduce you after you now.
Thank you, Diane.
Okay.
Yeah, I guess that's
Sorry, introduce yourself now.
Carmen's up. Yeah, Carmen's up.
Hi, everyone. And again, thank you for joining us today on this presentation, PowerPoint presentation. And again, we're happy and we're proud to do it on behalf of Coastal States Bank. And hopefully you'll get some good information that we're going to present today, and it's going to be useful for you. And again, we don't want to become product specific, but you will see some familiar generic terms out there through the course of the day today. We understand that attendees could be from out of this area and may not be familiar with Coastal States, so we do want to keep everything on the generic side. So, but I've been, as you see my little resume there, I've been in banking for a few years, mostly up in New Jersey. Joined this bank, I guess, a couple of years ago. And I've been in 2 roles here with the bank. So, but nonetheless, been in commercial lending for about 20 plus years, I guess now. So, but hopefully we'll give you some good information today, both on the deposit side and the loan side as well. So again, thank you, Karen, and the SCORE team here in the Lowcountry for allowing us to do this presentation today.
Absolutely. So as we just talked about, we just had the introduction from Coastal States Bank. We're going to do an overview of deposit products for nonprofits and then lending concepts for nonprofits. And Carmen and Diana, just let me know when you want to move to the next slide, and I'll be happy to do that. So let's kick this off.
All right. Thank you, Karen. So we're going to talk about once you have your nonprofit established, what are the necessary paperwork, what's necessary when you come into the bank to open up those accounts, and why is it necessary? So normally, you'll actually probably have determined the name of your nonprofit, you've applied for your EIN number, you have an executive, probably executive person in place, you maybe have a board. And through all of that, you've decided on how you want to run your nonprofit, who's going to be responsible for signing checks, for managing the deposits, what type of deposits are you going to be needing in order to be successful. So with that, we're going to ask for several documents, and it's important to bring those documents in because we want to make sure that we are opening the accounts for the right individuals, that we have the right EIN number, we have the legal name of the business, we know who can sign on the checks, what kind of limits potentially are put into place. So having your incorporated paperwork is very important. Your bylaws, you should have those in order. Your EIN number, which is very easy to get through the federal tax, IRS. And then your letter of exemption. Of course, all nonprofits are exempt from the IRS, so that's important to have that information also. So those are that's all the documents that we will need, any bank will need to open up, to get the account open for you. Karen, next page, please. So once you have all that information and you meet with your banker's probably going to sit and go over numerous products that could be beneficial. And when doing that, you want to kind of think about, well, what is our day-to-day balance that we're going to have? Do we have excess cash? Are we FDIC insured with all of our cash? So the first thing will be an operating account. That will be your day-to-day account that you use for just your operating business. Some people will run payroll through that account. Some companies will actually set up a separate payroll account. It really just depends on how you want to manage it. Maybe your accountant has some views on that. So that's depending on how you would like to manage the money. But from a small business checking account, most banks will offer some type of nonprofit checking account. Those nonprofit checking accounts normally earn some interest. So there's some interest being paid on those funds. Sometimes there's a minimum balance required. And it's not normally a lot. It's usually somewhere $500, some $1,000. But if you're going to get hit every month with I'm just going to use $10 service charge, at the end of the year, that's $120, which to a nonprofit means a lot of money. So it's important to understand the fees that are associated with any type of account that you open. So understanding that minimum balance is very important, what the service charges are, and then of course that interest. If you do have excess funds, then we always recommend taking those funds and putting them into some type of money market account. Some banks will call it a business savings account, but you'll want to keep those excess funds in those accounts because normally, and in today's environment, those accounts are paying somewhere north of 3.5%, 4%. So if you're earning 0 on one side and you can earn 4% on your excess funds, again, that's additional money to your nonprofit. So looking and seeing how much money you have and what you have available and where you can put those excess funds is very important from a cash management standpoint. Next slide, please, Karen. We always get asked who should sign the signature cards. Well, that's within the bylaws that you have designed. So within your bylaws, we're gonna read the language and determine who should sign the signature card, how many signatures should there be, what type of internal controls have you put in place for your executive director potentially and other people. Normally we see an executive director sign. We'll see a treasurer sign, maybe a secretary sign. So all of those individuals sometimes will sign on that signature card. We will ask those individuals to provide a driver's license for us and a social security number so we can identify those individuals also. That is a requirement by law. That's just, we have to have that. When we put in here about 2 signatures, we get asked this a lot. Can we require 2 signatures on checks or withdrawals? yes, you can within your own internal arrangements, but in today's check clearing environment, everything clears electronically. Many, many years ago, checks were looked at on an individual basis. Today, everything comes through electronically. So within your own nonprofit, you can have your own set of internal controls, but banks do not look at items for two signatures for withdrawal. Any questions on that? Well, I guess we're not asking questions yet, right, Karen?
yet.
Sorry, yeah.
No. People should ask questions as they go through. Matter of fact, there is a question. How many signatures, authorized signatures, should there be on an account? As far as not to sign the checks, but the account, and should board members be on the signatory authority?
So that's a good question. So always, I would say always have at least two signatures, because you never know when, and so within your bylaws, it's going to probably state that the executive director and potentially the treasurer can sign. Okay. You also can maybe add another board member to that. So in the event, and we run into this a lot, that for some reason somebody needs to do a wire. I'll use a wire as an example. And if we don't have the proper signatures on the signature cards, then those, somebody just can't call up and say, hey, we need to do a wire for this nonprofit today. It has to be one of those signers. So having enough signers on the account is important. But remember, those signers are signers on that account. Can they walk into the bank and ask to take money out of that account if they're a signer? Yes, they can. So you want to make sure that you're putting the right people on the account that that you can trust, and hopefully we all know that we can trust everybody, and that they understand what the expectations are.
Yeah, thank you. And the only thing I will mention, just from working with my nonprofit clients, please reconcile your bank accounts.
Oh, I'm going to talk about that.
Oh, good. Then I'll let you talk about it.
So you can move to online banking. So again, here's another way that within the organization, within the nonprofit, we will, give certain people access to online banking. Okay. There are different levels of online banking. So the most simple online banking is one that we call for small businesses, one that we use in our company, and I think banks have two different systems they operate from. But so you will have you could potentially have two people that have access to online banking. And through that small business online banking, they can access the accounts, they can view items within the accounts. They have the ability potentially to move money from your money market account to your operating account or to a payroll account. So there are a lot of things that you can do through the online banking. You also can have what we call the E-Corp side of online banking, and that gives bigger nonprofits, bigger businesses, different type of controls to put into place. It gives them the ability to do direct deposit. It gives them the ability to do ACH, whether it be withdrawals and or payments. It gives them the ability to maybe set up an individual within the office that can only do view only and help reconcile accounts. So depending on how you want to set up your online banking, there's different access points that can be given. Online banking is important that we encourage our businesses to look at their online banking on a daily basis. Look to see what items are clearing on a daily basis. And where we find people, where there's failure sometimes is they'll open up the online banking, they'll open up the checking account, and they will look at the check number. In today's world of fraud, we see more altered checks, more forged endorsements, more, I hate to say, bad actors that get a hold of your account number. I mean, just think about that if you write a slew of checks to your vendors and you put them in your post office box, and the bad offender comes to the into an area and takes the mail out of the post office boxes, they then have access to your routing number and your account number. They can easily print checks. So when you are balancing your checkbook, when you are looking at your checks online, open those checks, make sure they're made out to the right people that you actually wanted them made out to. Make sure they're for the right amount. Make sure the check numbers are right. We find that people that look at their checks on a daily basis, review their accounts on a daily basis, have far less fraud than most other companies. So, we encourage this all the time. And unfortunately, the bad actors are way ahead of us. I mean, they that's all they do is sit around and try to steal money from people, Any questions on that?
No questions right now. Please, everyone who's attending, if you have a question, no question is too simple. Please put them in the Q&A box and we'll be happy to obviously pass them along.
Thank you. Next page. So these are just some additional products that most banks will offer that could help, different services, different ways to manage your money, different ways to make deposits. So as we had mentioned earlier, reconciling your bank accounts monthly, sometimes it's really hard if you don't have, if you're trying to run a business, run a nonprofit, trying to, go out and raise funds for a particular event. And then at the end of the month, it's time to reconcile your bank account and you don't have time to do it. And you put it off 1 month and you put it off 2 months. And all of a sudden you get behind and then you do have fraud. And if there's a certain time frame that we can help you and there's a certain time frame that we can't help you. And so reconciling your bank accounts on a monthly basis is so important. And it should be a fiduciary responsibility of someone within the nonprofit organization. And then also a lot of our nonprofits will have a bookkeeper or an accountant, outside counsel, outside individual that balances those statements for them also. So a second set of eyes, we see that a lot in nonprofits and businesses also.
We do have a question. How long will it take checks to clear in a small business account?
Checks clear within 24 hours now.
Mm-hmm.
There's the days of what I would say, we used to write a check and it would take, we called it float. There's no such thing as float anymore. Everything clears electronically and most checks will clear within 24 to 48 hours.
Is that true of larger checks as well?
Yes, ma'am. There's checks, there's not like a large and a small. It's
Okay.
checks clear. Unless there's a reason for that it got, for instance, maybe Karen, if there was a reason that check rejected at the bank because it didn't meet certain criteria or it was non-legible or there could be a reason why it rejects, but it's going to get viewed and it's going to get cleared within a certain time frame.
Mm-hmm. Which then supports your comment of people need to reconcile their accounts quickly because within 24 hours, that money could be gone.
Yes, ma'am. Mm-hmm.
Okay, that's it on questions right now.
So credit cards, we always recommend a lot of, credit cards. We recommend if you want to have credit cards to pay for services, we recommend credit cards. There are a lot of really great credit cards out that are available to nonprofits and to businesses. If you're going to have credit cards, I would highly recommend looking for credit cards that pay you some points, that give you a benefit. That way you can take those points and use them for future purchases potentially. So if you're going to operate by credit card, then I would highly recommend you get a good credit card that has some value to it. Normally, somebody will ask to sign for those credit cards and then potentially ask to guarantee those credit cards. So that's something to think about as you're putting together your nonprofit and your business plan, to think about the credit side of it. And Carmen's going to talk a little bit more about that. We also recommend some of our larger nonprofits will have what they call purchase cards. So a purchase card or a P card gives individuals the ability to go out and purchase. Maybe they're traveling and they're given the rights to have gas for their card, so they can use the P card for gas, but yet they can't use it in a grocery store. They can't use it in a convenience store. So it allows companies, nonprofits to be able to control expenses of their employees and better manage the expenses. So they become more popular, I would say, in the last couple of years, versus just giving a credit card to 5 different people and not being able to control where the credit cards are being used. This just gives companies and nonprofits more control within their organization.
We have another question. Do you have any recommendations on most credit cards?
We offer credit cards. We have a service here at the bank, but I'm just going to say this. I love to sell our credit card, but Capital One is probably, like, I would say Capital One, CITI, some of those, Discover, they have really good point systems and really good benefits. Now, I want to say that when you're looking at points, you also want to make sure you're not paying $1,000 a year in an annual fee. So you need to outweigh, the benefits, the negative with the positive. But yeah, look, there's some. I know a lot of people that use the Capital One. Not that I don't. I'm not selling Capital One.
Right,
But,
we're not.
right.
Well, I would also add to that, American Express
Right.
has some tremendous cards for businesses. Again, to Diana's point, many of them carry a hefty fee, anywhere from $95 to $695 annually. So you have to kind of measure the cost and the benefit to that. But American Express, again, not an endorsement in any one card particularly, but American Express has some nice benefits along with Discover and Capital One.
And unfortunately, the days of free credit cards with no fees has gone by the wayside for a good part, especially if you want to get points and obviously benefits at the end. So,
yeah.
Another question, is the purchase card obtained through your bank?
Yes, we have a purchase card program through our bank, and I would say that most banks probably have a similar program out there.
Okay, that's it on questions right now.
Okay, so a couple more things is, one is we love people. I mean, most banks like people to come into the bank, but to be honest with you, in today's society, people are looking for a quicker, faster way to get things done. So remote capture and mobile deposit both have become very, very popular products that most banks now encourage, actually, businesses and nonprofits to use. So mobile deposit is we give you the ability to make your deposit right through your smartphone. So you would actually, most banks, you would have the app of the bank on your phone. You would be able to review your accounts through your app. You would be able to transfer money through the app, and you also would be able to make deposits through the app. Now, sometimes on a mobile deposit, they will limit you on the number of items and the dollar amount that you can deposit in one given day. So you would want to check with the institution to see what those limits are, but it is a quick, easy way to make deposits. The other way is through remote capture. And this is a service that I would say for nonprofits that have a lot of items coming in. And instead of going to the bank and maybe the item count is over what they can do through their remote deposit ability, it would give that they could actually have a machine at their desk. They could run the checks through the machine, and then the deposit gets made that day. So normally there's a small fee for that for the machine, but again, it's just a quick service to allow businesses and nonprofits to make their deposits.
Another question on accepting credit cards for payments. Obviously, many of the nonprofits have do remote festivals and the like. Do banks have the ability that it can easily take credit cards outside their normal location?
Yes. So for, that's called merchant services. And in today's environment, the days of what I would call the knuckle buster, where you get the card and you slide it, and then it has to be processed, and those days are over. And mostly today's environment is what they call handheld. So there's these handheld machines that it's either by, and everybody knows this, you just touch it and or you swipe the card, and then you process that night and the payments go in the account. Normally 24 to 48 hours before those deposits actually go into an account. But most banks will provide a merchant product. Again, when you're looking at merchant products, there's outside vendors that do this also. You want to make sure you understand what the fees are, what fees are associated with the service, what every time there's a swipe, what the fee is going to be, what they call the exchange rate. So it's important to understand the fees, but also at the same time, it's a necessity. Most events that I go to, credit cards are the #1 form of payment for those events. So just finding the right merchant service to work with is very, very important.
Another question, are there any additional incentives with Coastal State Bank for military veterans and nonprofit accounts?
That's a good question. We're always willing to negotiate everything that we do about that. Okay, so because we are a community bank and we do support nonprofits, we have some really good accounts. And at the end of the day, we would, profitability is very important to any organization, but also working with nonprofits, veterans, those individuals is just as important. So we're always willing to work with our businesses and do what we can do to help them be successful.
And I can support that answer because many of my clients are extremely happy with their accounts at Coastal States Bank. So anyway,
thank you.
Thank you.
We'll stop with the plugging at this point. But anyway,
hey, the last thing I do want to mention, and then I know my time's probably running up, is if you'll flip the page. This is something that. Do you have the FDIC page in there, Karen?
Here you go.
Yep.
Oh, here it is. Okay. So we get a lot of questions about this. And depending on, again, the fiduciary responsibility, we hear like, we need to make sure all of our funds are covered. So FDIC covers nonprofits and business accounts by EIN number. So up to $250,000 of insurance is available per EIN number. So if you have 5 accounts and each one of those accounts has the same EIN number, it is not by account, it's by EIN number. So that's important to understand because a lot of times there's just confusion. People think it's by account, but not in the case of a nonprofit or a business. It's by EIN number. So we have some services available, and it's called IntraFi. So we understand that from a fiduciary responsibility that businesses and nonprofits want to cover the funds over the 250. So through IntraFi, we have the ability to cover funds depending on what the funds are. And it's just basically, it's a consortium of banks to where your money doesn't leave our bank, but it's just through a partnered network that we're able to have all the funds insured over the $250,000 amount. But you don't have to go around opening accounts at different banks. You keep all your money at Coastal States Bank, and then we work through our consortium and our partnership to insure your funds, and then we give you the ability to go out through their online banking and look at those funds. You also can see them online also. So it's just something as you're out looking and opening accounts, especially for those new nonprofits, and you have funds over the 250 and you're concerned about FDIC insurance, ask them what are ways that you can get additional insurance for your funds. And just note, not every bank offers this service. We've offered the service since we opened 20-something years ago. And it is a very, very successful service.
Hmm.
And
Okay, one
that's-
last question and then we'll hand it over to Carmen. What can be done about a check written by a charity that has not been cashed for several years and the recipient can no longer be reached?
Put a stop payment on it.
Yeah.
So it's
and
still
then-
outstanding. If
Hmm.
it's still outstanding, I would put a stop payment on it. And if they come back and say, hey, you owe me this money from X, Y, and Z, then you can have that discussion. But you probably want to be able to close your books out and show that. So just put a stop payment on it.
Okay, Carmen, your turn.
Great.
Hope
Thank
I
you,
didn't
Karen.
take too long. Sorry.
No, you're good. No, you're good. Thanks, Diana. Some great, obviously great information about deposits, how they work, how, all of that should be structured. Certainly very important information for our nonprofits. But we'll kind of transition to the other side of the balance sheet, onto the loan side. And we'll kind of get started with when's it a good time, when's it a bad time. So I kind of like to start this off saying, well, if there's a specific need coming up that's being forecasted, like purchasing a building or, adding on or getting equipment or taking on new employees, make sure that there's a sound repayment plan. I'm going to get into some detail about repayment plans, how that kind of works with some of the things that we look for in cash flow analysis when we look to make sure that the nonprofit can repay the loan. But we'll get into that. But that's basically the first, the cornerstone in any loan is obviously, what's the source of repayment? The bank going to get repaid? Will there be any issues, collateral, and so forth? But we'll get into that. A bad time, obviously, for a loan is if your organization is operating at a deficit. Banks typically don't like to see negative numbers on income statements and balance sheets. So be wary of that. Obviously, we talked about control before in the deposit section. So just make sure that the finances are in check. And that's done by various methods, and we'll get into that a little bit. Obviously, more loans talking about perpetuating the debt cycle. We don't want to see that happen. And then obviously, if that does happen, we need, the nonprofit needs to kind of evaluate, where it is. So, all right, we'll move on to this slide. This is in terms of lending services, and certainly this Coastal States Bank is no different than any other bank in this market or any other. We offer, a full array of products, lines of credit for working capital, term loans for equipment, and commercial real estate loans. So, and those are typically commercial real estate loans are amortizing term loans, whether 10, 15, 20-year, in some cases 25-year terms for that type of loan. So,
Carmen, it's a question. Are there advantages and disadvantages to a bank versus a credit union?
I wouldn't say there is. I mean, certainly this bank is a commercial bank, so obviously commercial banking is what we do, businesses. So I would say our level of expertise is very high in commercial lending, for example, but not to downplay credit unions. Certainly there's a benefit to dealing with them as well. Interest rates might be comparable. They might be a little bit more favorable on credit unions. I don't really know that for sure. But I certainly think there are advantages to both. So would I say one is better than the other? No, I wouldn't. I would say they're very comparable.
I'll just add that credit unions for the longest time were not in the business space at all. Credit unions were, you had a military credit union, maybe you had a Navy Federal, whatever, they were actually specific to a particular organization. And over, I would probably say in the last couple of years, credit unions have started getting into, I'll call the banking space. So they're relatively new on the commercial side of things. Doesn't mean they don't know what they're doing, but they don't have, I would say, the experience that commercial banks and other banks. So they're new into our space.
Mhm.
We like them sometimes and sometimes we don't. Just
Yeah.
kidding.
We love competition.
Yeah.
That's it on the questions.
Okay, how we structure loans. Again, this is very generic across the board for all banks and as well as credit unions, since we're talking about credit unions. Lines of credit are generally short term, obviously for 1 year, typically not more than that. We basically establish a line of availability. There are monthly interest payments, as you see there on the screen. And then the principal is due at maturity, which is in 12 months. Again, this is used for typically short-term needs. That would be working capital and things like that on a short term. You certainly would not use a line of credit for a commercial real estate loan. Commercial real estate loans are long-term. So in addition to that, term loans. So again, these can be 3, 4, 5 years, possibly longer, depending on what's being financed. For example, if a nonprofit purchases a piece of equipment that has a longer life cycle, we might look to finance that for a little bit longer term. Interest rates typically are based on the term. So typically, interest rates for a shorter term are a little bit less than a longer term. Obviously, the bank is committing funds for that much longer period of time. Typically, we'll look to finance, a large piece of equipment for a little bit longer time. Those are monthly interest, principal and interest payments. Whereas comparing that to the lines of credit, those are, again, interest-only payments. But with a term loan, day one, once you sign the paperwork to get the loan, you'll get basically a payment book. Well, we don't do that anymore. I just dated myself. But a payment, a statement, billing statement, and that'll require monthly P&I payments. Commercial real estate loans, that's CRE, commercial real estate. Those have typically 20-year amortizations. We fix those typically, again, for 5 years. That's in general terms. Some banks may do it a little bit longer than that, but most do it for 5 years. And again, monthly principal and interest payments. So again, long-term loans. So that's what we look for there. Okay. If we want to go to the next slide, Karen. There we go. What do I need to apply? So obviously, we want to know as much detail about the proposed financing request. So, if it's in a piece of equipment, for example, it could be a huge copier machine that does scanning and all that kind of stuff. We want to know, the manufacturer and the serial or model number, the cost. We want to see an invoice, that type of thing for that. Entity formation paperwork. Again, Diana alluded to it in the deposit section. We're going to want that. We're going to want the, all the formation documents, the bylaws, resolution from the board, as well as meeting minutes. Basically, the resolution from the board is getting the board's consent to pursue a loan with a bank for whatever the purpose and the amount is going to be. So we need to have that in file. And then the second paragraph there, if it's a large acquisition, such as a parcel of real estate or a building, what's the source of down payment? Is there a capital campaign? We'll talk about that in a minute. Are there any additional tenants? In other words, it could be a building where there's excess space for the nonprofit. The nonprofit may want to lease out the excess space to a third party or third parties. So we kind of want to know that factors into how we look at cash flow, since we know there's additional income coming in to potentially support the debt service. So a projected rent roll kind of in the same line there for the commercial property for the building. So basically want to know the income and expense. Here's what the lease amount's going to be, and here's what all the operating expenses are for the building. That could include insurance, real estate taxes, maintenance, and repairs, and utilities, and so forth. So those are just some key things that we need to know, kind of going a little bit up front to kind of get a really good understanding of the credit to allow us to then take the next step toward underwriting. And we'll get to that probably in the next slide. Karen, if you want to go on to the next slide. We get this question on occasion. Do we need to personally guarantee the loan? Typically, and I'll say this very generally, typically for nonprofit borrowers, no. However, there might be some nonprofits that may require personal guarantees. I've actually seen this in a couple of nonprofit loans that I've done in my career. It is highly unusual. However, I have seen it. And then, of course, the bank does require the officers or whoever's duly assigned to that to sign loan documents if the loan is approved. So yeah, in general, no personal guarantees unless stipulated in a bylaw or a resolution. Anyone? Okay. All right. So now we're moving a little bit ahead into the loan itself, and basically some financial paperwork that we like to look at. Some nonprofits will not have to file a tax return. Others do. They'll file a Form 990. We like to get the last 2 to 3 years. Again, I would say this is probably in general for most banks. But we do like to see the last 2 to 3 years. And then also audited financial statements. That's your income statement and balance sheet for the same time frame. For our nonprofits, those are obviously handled by an accounting firm. Many of especially the larger nonprofits do have audited financial statements. They're required to have those. So we do look for those. And then for other nonprofits who might be on the little smaller side, we like to see receipt of quality, and I'll use that in parentheses, financial statements. So P&L or statement of revenues or receipts and expenses, and a balance sheet. Those typically come from QuickBooks. Many nonprofits use QuickBooks for their P&L and balance sheet reporting. And then also, in addition to that, a business debt schedule that basically tells the bank what type of other debts the nonprofit might have, other loan obligations. So those things are just in general some of the things just scratching the surface that we would need.
Carmen, a question. What if a nonprofit is not open for 2 years? It's only 18 months, let's just say.
Yeah, it becomes a little bit more difficult, however, not impossible to make accommodation. But as an unwritten rule, I guess we are looking for typically one that has 2 to 3 years track record, if you will. But we will entertain certainly looking at requests that are less than 2 years. We're going to take in this case, you mentioned 18 months. We can assume that it's a medium-sized nonprofit that might have a return filed for 1 year at least, and then interim statements for the next 6 months. Typically, again, we look for 2 years, but it's something that we could certainly accommodate. There are a lot of other factors that we look at, whether we might have a deposit relationship, with the bank, how well known. Maybe there are some officers or trustees of the nonprofit that are well known to the bank management. So there are a couple other things that we look at. So not a hard no in all cases, but it's a little bit more difficult of a process.
Thank you.
So what does the bank look for? And we kind of talked about it, but obviously a deposit relationship here is very important. We want to make sure that the loan request matches the use of funds requested. And I illustrated that example a couple of minutes ago in prior slides where, obviously you wouldn't take a line of credit if you're thinking about buying a building. That's a commercial real estate loan. A line of credit would, bringing on maybe more staff. Maybe if you're in the business that might need inventory for whatever reason, or those type of things, a short-term, loan need, that would be something a line of credit would be for. We look for sound management oversight by the board of trustees. And then obviously cash flow to support the proposed and existing debt, if there is any, which is why we ask for the business debt schedule. It shows us what other debt might be out there in addition to what this loan request might cover. So those are things, again, in general, falls along the 5 C's of credit, which is that screen that you have up now. And we refer to them: creditworthiness, capital, cash flow, collateral, character. Everybody's probably seen them. But I just like putting that in there. And it's still, there's a lot there. Certainly character and creditworthiness are very important. Cash flow, obviously, capital, and collateral. So we like to refer to them here. The next slide, what other sources are available to my nonprofit? So if I'm a nonprofit and I'm saying, well, I might not have 2 full years, financial results at this point. I'm kind of getting off the ground. Certainly with SCORE and through the SBA, Karen and team, you can kind of speak to this, but there are some avenues available through the SBA, through grants, through CDFIs, which are Community Development Financial Institutions, and there are a number of them. And then in South Carolina specifically, there's the South Carolina Community Loan Fund. Other states may offer similar programs, as I note there, as well as corporate giving or grant programs, crowdfunding sources, just to name a few. So yeah, there's definitely ways to investigate other credit opportunities in addition to traditional bank financing.
Yes, and going back to Carmen, if you work with a local SCORE chapter, if not, they can certainly point you in the right direction. Sometimes a bank loan is not the best way to go.
Yeah.
Especially when you don't have a P&L or you haven't been around, you should be looking at the grants or otherwise. Crowdfunding is becoming more and more prominent, just because if you have a group of or a relationship out there of people who want to support your cause, that's a way of them doing it without doing a campaign in one way, shape, or form, which then means usually you have to have a third party. So lots of sources. You just have to find the right one.
Sure. Thank you. Next slide. So in formulating this presentation this year, and I think this is kind of important to note and to make our nonprofit participants out there aware. Just some historical issues that we've kind of come across, and these are meant to kind of make sure that again, when submitting, when thinking about doing a loan, to really kind of have all your ducks in a row, if you will. And I think some of these bullet points are going to be helpful to a lot of nonprofits out there. The first one, we talk about cash flow management, and I put it in quotes. Basically, we need to see budgets. It's part of other financial information that we're going to require. But we want to see, a realistic budget. Is the nonprofit able to handle its operating expenses? Is there some money, whether it's designated funds that might be reserved or not designated? And then we want to see some cash flow projections of 12 to 24 months, again, to make sure that the debt is able to be comfortably supported. And sometimes we don't see that, and that takes a little bit of coaching on our part, as well as with the nonprofit, to kind of make sure that they're in that mindset. The second thing we also often look at is what kind of collateral can be offered to the lender. And I used a POA and an HOA. A lot of them obviously are nonprofits. We typically look at something called a collateral assignment of regular and special assessments, which basically is a UCC1 filing that's done through the county and state entities. And then also offering the ability of offering commercial real estate, equipment, vehicles, et cetera. I talked about that a little bit ago. And then another important thing is to be wary of having reserves to fall back on. So in other words, basically, if for some reason the economy goes into a downturn and for nonprofit, donations, contributions, those types of things slow down, what happens? Where are we? What do we have available to us in the form of capital in order to, especially in this case, where we're talking about loans, to enable to repay the loan. So we have to make sure that there are some reserves, and the bank wants to see that in pretty much every situation. And then the next point there on the bottom of that page is, how is our current banking relationship? God forbid, do we have occasional or frequent overdraft NSF activities? And I'll be quite frank with you, this can adversely affect when lenders evaluate the nonprofit for a credit facility, simply because it kind of goes back to management. It goes back to, obviously control or control mechanisms built in. And that's a red flag for us, to be honest. If we see a lot of NSF activity on the nonprofit, that's something we say we become a little wary, a little uncomfortable when we think about, a loan. So if the account can't be managed properly, do we think the loan will be managed properly? So some things we got to think about there. On the next page. Again, is the cash needed for debt repayment included into the financial budget? Many times it isn't. This is, again, the nonprofit should kind of have an awareness as to, based on the type of credit facility they're looking to do, what an estimated payment might be that should be included in the budget. We normally see revenues, expenses for the year, which is great. Again, that leads to the next bullet point, talking about cash flow management again. We got to make sure that the projections include the new, debt repayment in addition to what is required currently with any existing debt. And we want to see that over a 12 to 24, even 36-month period. We talked a little bit about collateral. Again, that's kind of a repetitive screen there, and that whole screen may be repetitive. Sorry about that. Okay. So I think we can kind of go to the next screen, if we wouldn't mind. Capital campaigns, that's something that for most nonprofits is very important. Most nonprofits do a capital campaign in some form or fashion. And basically that's the ability for the nonprofit to raise funds for a project or for a cause or for a building or for whatever. And we get some questions about this. Typically this bank looks at about 25% minimum funds in a capital campaign. It can be less than 50, but we need at least a minimum of 25% if we're, considering a capital campaign before a bank will obviously consider seriously doing a loan. And can that be a commitment, or does it have to be actual funds raised and in-house, so to speak? We can, they should be at least 90% roughly of pledges. Funds should be collected, and generally they run about 2 years or longer. In some cases, we've seen them for 3 or 4 years. So again, that's an important item there. So we want to make sure that, you know, the campaign again kind of matches the low need in this case. How is debt service handled? We manage net profit to zero. Just one thing I'll mention there, basically debt service should not exceed 35% of total revenue. So if the nonprofit takes its top line revenue, we want to make sure that all the obligations typically don't, the debt service for those obligations don't exceed 35% of revenue. So it's a very simplified way to say that. We kind of do a little bit with some cash flow analysis, but for this purpose, for general purposes, that's a correct statement. And then unrestricted funds. What are the bank's expectations? We have restricted funds, we have unrestricted funds. We want to see reasonable trends for cash and investments and explanation for sharp increases or decreases. That's an important thing we look at because we want to make sure that there's enough capital. And I talked about that a few slides ago. So that's something that's very important that we'll examine. So we want
So
to make
Carmen,
sure.
a question, does banks look at your credit score and does that play a big factor?
Yeah, again, for nonprofits, because there are no personal guarantees, that we don't evaluate credit. So there's no credit history pulled, if you will. Typically there's on regular, you know, traditional business financing where you might have a company, we are able to basically pull a credit report, if you will, on the business. For nonprofits, I would say I'm not familiar with that. I've never seen it in my years doing this. But in answer to your question, do we look at physical credit reports? No, because there's no personal guarantee. Couple more words on capital campaigns. Again, we're talking about, you know, there's a question that came up. Our net profit generally is zero, good cash balances to offset debt service for a 12-month period. Does this factor into the bank's lending decision? Very simply, it depends. And it's among many other factors that we consider during the underwriting of the request. We typically like to see, and we manage the cash flow coming from basically the operation of the nonprofit. So, but again, in order as a fallback, we do look at cash balances, which is why I said it's important for us to know any sharp decreases, any sharp increases. So we kind of want to get, you know, a full understanding of that. But yes, and it depends, but it does come into play here. And do personal guarantees help if the nonprofit doesn't have debt service coverage the bank expects? Again, it depends. Most banks don't require personal guarantees. However, it can be considered in the underwriting process, and it may help. It may be beneficial. But again, as a whole, we don't require personal guarantees. But in the case where maybe a guarantee might be offered, it might, and I emphasize might, help, you know, in the credit decision. And then that page, who can I call or email here? That would be me. The best number is probably the cell number there that's listed. I do pick up my phone, and unless it's midnight and I'm asleep for a few hours. And my email is certainly another good way. So anybody else have any other questions? Oh, there's another little screen there which we can kind of talk about some key takeaways. I know we're running close on time. So many different lending products available for nonprofits. Banks need to have a clear picture of how funds are generated, obviously. What type of others, you know, revenues, ticket sales, events, fundraising. We talked about capital campaigns, etc. And preparation is very important, obviously. Good quality financial information, audits, and those type of things. So
no other questions, and I just want to, and we are running over time. So, well, wait a second. I have one more question. Does it look better for a business to wait and ask for a loan after they've been operating? If so, for how long should they wait?
I would say, yeah, in the case of a nonprofit, I would say, and this is my personal comment. I would say to, maybe have a little bit of a track record for the nonprofit, to kind of, get its footing a little bit, make sure that the mission is being, I think received in a lot of communities, and depends, there are a lot of great nonprofits out there doing a lot of great work. So, but I would say to kind of get, a little bit of a footing. And then as they do, we can then do some trend analysis and start to see, whether or not it's a viable type credit facility we want to pursue. So
That's it. And thank you. I know we started a few minutes late, so we're over a few minutes late. I hope everyone has found this to be useful. I want to, again, this is the first of our series of nonprofits. We have a very exciting lineup this year. And so we have one every week. It's every Tuesday at noon, and starting with this one, and then strategic planning, volunteer management, board management, marketing, state compliance. That's a brand new one, and red flags. We're delighted that the Office of Secretary of State will be with us, and grant writing. So please join us for any of those. Also, we have the last of our marketing with as our agency on November 5th, Marketing Evolution, Old Platforms, New Strategy. Ultimately, Nicole has actually been a fantastic supporter of us, and obviously gone through a number of things, and she's been doing these workshops for us for a number of years at this point. If you need a mentor, please go to SCORE.org, or if you're in locally, SCORE.org SE Low Country, and someone will be able to help you. We have a number of mentors who are well versed on nonprofits who can help you and point you in the right direction. And we are always looking for volunteers, whether it's mentors. Right now, we do need someone who's going to help us with graphic design. So these presentations don't get put together by themselves. We have wonderful people, but now we need more since we're doing more. And Spanish-speaking mentors. Obviously, the community we're serving now is growing. So we are looking for people who can help us obviously reach out to that part of the community. And obviously follow us on social media and all our channels. And once again, we cannot say thank you enough to Coastal States Bank. They've been a wonderful partner, not just for the series, but supporting our clients, answering our calls. I know a number of my clients have called Carmen and asked them all sorts of interesting questions. We thank you for being obviously part of us. And we are a resource partner of the SBA. And with that, thank you for those who hung in there for the extra couple of minutes. Thank you to Carmen. Thank you to Diana. Much appreciate your help. And everyone will be receiving this recording as well as this PowerPoint presentation, so you'll be able to contact all of us. And have a good day, folks. Thank you.
great.
Thank you. Thank you to all the nonprofits. Thank you.
Bye now.